following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. We have the Dow Industrials up 172, NASDAQ up 56, S&P's up 21, gold contract up $10.50, trading at $1,072.20. Silver up 43 cents at $14.20. Platinum up $18 at $8.74 an ounce. Copper up 2 pennies at $2.07 a pound. Light sweet crude down $1.50 at $35.85 a barrel. Bonds, the 10-year down 10 ticks, 125.25. 30 off 4 ticks, 154.19. King dollar down 303 ticks, 97.98. The euro is up 38 at 109, and the yen is trading up 19 at 121.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Okay. 2 p.m., Janet Yellen comes out with the first rate increase in 9 years. That's the first part of it. The second part of it is that the Fed, bottom line, is saying that they think at the end of 2016, the short-term rate will be 1.37%. That would be saying that the Fed will go up 1/4% each quarter. That being said, let's go take a look at the S&P. Well, what do you have? The SPY out here, you're at 207.23. You're up by $2.20. We've done 132 million shares. She's going into 192 million. So bottom line, number one, we'll see how we end this day. The spike that we just had right when I was coming on, folks, okay, you get a nice spike in the S&Ps. As we spike the S&Ps, now watch this. This is really cool, man. So we take a look at the S&Ps, and what you're going to see is this. Okay, so S&Ps trading at, they're at 2050. They spiked to 2062, and the spike didn't have juice, number one, but this is the kicker, and this is where it's always a danger comes in. You go over to the close of positions, right? And what you do is that you look at the tick for that, folks, okay? This is a monster. We come in with 1502. So what that was saying on that spike is that you had all these buy stops over it, and every single, well, I don't know, who knows every single one of them, I'm speculating here. Bottom line is that when you get a tick that is that dramatic, meaning a 1502, you can expect what's happening right here. We'll see how this market closes, but that is not natural buying. What that is that that's closing positions that more than likely people were shot in those areas, closing positions. And what that does set up, by the way, okay, is set up lower prices. So bottom line, we'll see how we close out the day here, but the lows of Monday are still vulnerable in a big way. The NASDAQ composite, the Qs hit a high today of 113.84. Right now we're at 113.39. We've done 36 million shares, and the Qs look like they can come in with the volume. They have to do another 10 million shares coming into the close. Now, they're capable of doing that. You know, we'll see whether that's, in fact, how they do shake out. Inside the Qs, the culprit inside the Qs and the S&P today has been Apple. You know, Apple has broken its lowest swing point, broke it last 3 days, broke it with volume on the dailies. It's going to have volume on the weeklies. We've done thus far 164 million shares versus 189 on the weekly swing. Bottom line, Apple wants lower price, which is going to be really hard for the NDX 100 in particular to get into higher price. Now, you talk about counterintuitive and about as cool as you can get. The Fed's going up on rates. Bottom line, guess what? Gold looks the other way, says I want higher price, has volume come into the move also. Gold has traded as high as 1077 today. We're at 1073 right now. We've done 129,000 contracts, which isn't bad, not great. Bottom line, it's holding price. That's saying that you're going to see gold go after the 1088.30, which was the high that was generated on December 4th. The one move here that I would say can give you the most amount of information has to do with the 10 and the 30-year bond. And this is what it is. This is absolutely amazing, actually. The 10-year bond is trading at 125.26. It's rejected lower price, has lighter volume, and bottom line wants to go back to 127.10. Now, that's a mind blower, because the bottom line is that you think that the Fed has rose the rates now, is saying inside of their minutes that they plan on being at 1.37% at the end of 2016. That would, the Fed, that would be saying that they go up a quarter point every 20 months. King dollar. What do you have with King dollar? What we have with King dollar is this. King dollar backing off. King dollar wants lower price. It failed on price, failed on volume. We've done 39,000 contracts. The 39,000 contracts is going against 125,000, as well as, the other one's 30,000. The other one is 46,000. Bottom line, King dollar got to 98.64. You're trading at 97, 96. That's setting up King dollar that it wants to go down to 94.05, which is the last swing low out here that was generated on October 15th. Bottom line is that it's volatility is out here in spades. The gold equities, we take a look at Rheingold Resources. Rheingold Resources right now up $1.80. You have 500,000 shares. Want to see a little more volume on Rheingold. Anico Eagle, we take a look at Anico. Anico is up 85 cents, 2 million shares. That's not bad. All of these gold, not all of them, well, many of these gold equities, they're going to go for the December 4th high, folks. And how we get up to that high, meaning do we get up into that level with real juice? That is saying that it wants to go higher. Now, the amazing part, there's silver. Let's go to silver. So silver, folks, was a false break downtown that had traded under the $14 area, and it just blasted higher, right back inside the range again. We've done 50,000 contracts in silver. Silver's going to make its way up to the 1464, and I suspect what we're going to see is you're going to see silver at 1641. Deviance, oh baby, we got the market, deviance and spades. Fed goes up, metals go up, bonds don't move. Pretty amazing. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now up $1.72. The Nasdaq's up 55. S&Ps are up 19. Inside the Dow Industrials, the strength versus the weakness. GE is the leader out here. GE's up 66 cents. You got Goldman Sachs up 355. JP Morgan is up 126. United Technologies is up 158. Taken away from it, there's only 2 stocks that are negative inside the Dow right now. It's DuPont down 92 cents, and ExxonMobil is off 58 cents. Inside the NDX 100, strength versus the weakness. Strength is Tesla. Tesla is up $10. Wynn Resorts is up 226, and you have Walgreens up 222. Taken away from it, on the way down, you get Pace Car down. Well, that's interesting. Look at now. This is really cool. So check this out. Well, you got the laggard. Even though the NDX 100 is up only up 42 points, folks. And what you have is that out of the 100 stocks, there are only a few that are actually, the laggards are not even down that much. So that's saying that across the board inside that NDX 100, that you are teetering, with most of them being on the negative aspect, which is just pretty wild. That's pretty wild, man. That's very unusual. I can tell you that. Yeah, so the worst one is only down 18 cents. It's fluctuating from 18 cents, of PayPal, down 46 cents. Let's go over and take a look at the financials, because what you're going to have here, banks, bottom line, should be going to make a fortune, because if the Fed is at 1.37 at the end of 2016, you can bet that the spread inside the banking structure is going to be pretty intense. So JP Morgan, it has the juice on it. It's up $1.30 right now. You're at $67.40. The swing point up that it's going to go for is $67.99 at 17 million. So you can see it's getting into higher price, and it does have juice behind that move. If we look at Goldman Sachs, Goldman Sachs doesn't have it. Goldman Sachs is down from 218. You're at 185. Goldman Sachs doesn't have it. Morgan Stanley, MS. That's interesting. Morgan Stanley doesn't have it either. JP Morgan does. Morgan Stanley is down from $41. You're at 33 right now. That's quite a hit, actually. Bank of America. Let's go take a look at Bank of America. Bank of America has the juice in it. That would make sense. Bank of America right now is trading at up 27 cents at $17.70. That's going to make that run going up to the 1801. Now, folks, let's go over to our man, Mr. Darryl Martin, as we do each and every Wednesday at 30 past the first hour. Don't forget, Darryl's got a great show right here at TFNN every Wednesday, Thursday, 12 to 1 Eastern Standard Time. Also has a show on Friday mornings at 10 to 11 Eastern Time. Darryl specializes in the Nadex platform. If you haven't test drove the Nadex platform, folks, come over to our website at TFNN. And what you're going to be able to see, you'll see the banner on the top, on the side. You can hit that banner, bring the account up. They will put $25,000 of paper money into your account. You can see how these contracts trade. Darryl Martin, what's going on?
Going, man.
I'm sure you had a little field day out here today with the type of volatility we had.
Yeah. I sat back. I put an iron condor on. That one's sort of just humming along so far. I still have an hour left of time decay left in it.
Okay.
And then, but I also have a straddle on. I went up and on a straddle on for half what my iron condor got me. And so, if the market continues this little rally, it's starting to get up. Starting to get some juice under its feet.
Yeah.
And if it continues that, then my straddle will take over and cover my condor. If it doesn't, then my condor will cover the loss on the straddle. So, basically trying to profit in either direction, flat or up or down. So all three. And
what we have had out here thus far today, folks, okay, the spread inside the S&P has been dramatic. There's no doubt. The low is 2037. The high has been 2062, and we're laying right at those highs right now. Yeah, it's going to be intriguing watching this whole thing shake out. There's no doubt.
They raised the interest rate, of course. I'm sure you just went over that.
Yes.
And so they said they're going to raise it 4 more times is the expectation by the council members in the next year.
Right.
I think part of this is the market is getting a sigh of relief from a little bit of certainty, like it finally happened.
Yeah, that's a great point. That's a great point.
And like they've been saying they're going to raise it. They haven't raised it. Finally, they have raised it. Okay, well, now we can get over the fact that it may happen because it's happened. And, okay, it'll probably happen 4 more times. We're probably looking at a rate about 1.5, 1.65 by the end of the year. Next year, they can forecast with that. It's the constant, crying wolf. And so I think that gave it a little bit of a boost. We'll see how everything else reacts. Oil got hit pretty hard today, closing down. But
yeah,
we'll see how the rest of the economy collapses.
Oil really getting whacked. I mean, oil, folks, is closed. Actually closing, let's see. Yeah, it's a closing. It's actually a closing low, because we closed at 36.31.
2009. The last time we closed this low.
Yeah, even 2 days ago. I mean, even when it hit a low, bottom line is that closed higher. So that is a lower closing low. Let's put it that way, which is pretty amazing.
It's the lowest close we've had since 2009, the lowest settlement. So it's pretty significant.
It's serious.
And remember what happened with the oil last time we went that low. So.
Yeah.
Turned around and
you know what is amazing? Watching, of course, fundamentally the interest rate structure goes higher. You think that, the dollar's going to go higher and they're going to kill the metals. And the bottom line is that it didn't happen. Well, it hasn't happened yet. Let's put it that way, folks.
And I talked about that some on my show today. I was like, in the one sense, the dollar going up should make, make it more valuable, the interest rate going up. So therefore, gold should cost less.
Right.
But the other sense, there's a fear of, well, what impact will that have on the economy as a whole? Imports, exports, housing, all that. And so, bonds are the one place you don't want to go.
Right.
Because, interest rates are going up, so they're becoming worth less, especially if they're going to raise them like every quarter. So the only place that seems somewhat safe in that mindset may be gold itself. So, I think that's why it hasn't been hammered by the raise in the interest rate.
Yeah, and, thus far, since we've come on, the 10-year was flat when I come on. It's down 14 ticks right now, but they haven't whacked the bond market yet either. I mean,
yeah, not yet, which is sort of surprising.
Yeah, it is. And what I do expect, the way these things normally shake out, folks, is that you get the volatility today, and then we'll see where this thing shakes out tomorrow. So it's gonna.
Tomorrow should be a fun day. I'm hoping it'll be a fun day. So we had a good smooth. I got. What's funny is, what I made the most money on today was soybeans.
Really?
Yeah, out of like everything.
How cool is that? So let me see.
It just had this nice smooth trend. I just grabbed on it and let it go.
They were off 0.5%, right? So
yeah. But it was smooth.
Yeah.
Not the thing I expected to really clean up on today.
Interesting, man. Particularly,
But,
with the high volatility, having it both ways. The thing that's going to be amazing is just watching shorter term rates going up, and we'll see where this shakes out with longer term rates. Thus far, folks, what you have is that the 10-year is still at 2.2. It's almost 2.3. The 30-year is at 3. So it hasn't affected that at all yet. I think what you're going to have, though, is that the 1.3 at the end of the year. That's percentage-wise, it's a lot more than I think the market is expecting at this point. You have a great one, a safe one. Of course, it's awesome that you have the show again tomorrow, noontime. Ready for action.
I'll see you then.
Okay,
see
man.
What's going on?
Have a great one, man. Have a safe one. Stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow up 220, Nasdaq's up 71, S&Ps are up 26 percentage-wise. That puts the Dow up 1.2%. The S&Ps are up 1. The Nasdaq is up 1.4. We go over and we take a look at this dollar index. Let's go take a look at the dollar. So, dollar index here has, we are at 98.50. And you get a lot of moving parts that are happening simultaneously right now. When we were just talking with Daryl, the dollar index was down at about 98.27. It's at 98.53 right now. That is going after its highs. And if we close, yeah, it looks like, well, the dollar index looks like it's going to make that run to 99.02. That being said, now let's take that and go back over to the gold market. Jeez. What we have with gold right now, that backed down slightly, but not that bad compared to where the dollar just went. So the gold market, well, yeah, it did back down. So the gold market just backed down from the 75 area to 68. That's what we did, but we backed down dramatically lighter volume. So you had the spike up there at 77. You back down into the 68 area. The S&Ps, we take a look at the S&Ps, what you have with the E-minis out here. E-minis are up 26 bucks. They're at the high of the day. We're at 2063. And there she is. 2063. Yeah, you got 30 minutes left inside the marketplace. The juice, the last time that we had any juice was the 2055. That was at the 2 o'clock spike. So we'll see if, in fact, that baby can hold all the way coming into the close. Into the Dow Industrials, what you have with the Dow. The Dow is up 217. You're going, let's see what we have indice volume-wise. So volume in the indices will be, oh, that's pretty intense. Now, this is going to be anemic. This is going to be weird, actually. So right now, you only have 690 million in the Dow Industrials. That is anemic volume. That's saying the Dow can come in probably 975, but guess what? That is, you want something over 1 billion shares in the NYSE. There's no two ways about that. NASDAQ Composite. NASDAQ Composite come in about 1.9. So both the indices are going to come in with lighter volume. If we go over to the SPY, we take a look at the SPY. The SPY's down 145 million. It's going into 192. That can do 160 million pretty easily. You can do 15 million coming into the close. The Qs are 38 million. They're not going to do it. The Qs need like 48 million. You know, it's holding price. The Q's still at the high. They're holding price, but you're gonna need more juice in order to get up and over those levels. We take a look at the Apple. Apple has been the culprit out here. You know, just when it's moving around just slightly. Apple, for some reason, can't get any traction. If we actually take a look at Apple and you bring this back, Apple is trading where it was trading in November of 2014, which is pretty intense. You know, so bottom line is that there's zero traction on Apple. There's no more buyers on Apple. That's what it comes down to. You have a high volume swing low out here. Apple, you're coming into the holiday season. Apple looks like it's making its way down to the 103 area. We go take a look at Amazon. Amazon's not backing off those highs, man. Amazon's taking over the world and not making a huge amount of money, but the bottom line is that Amazon's going after its swing high of 684. Right now, you're at 675. The IBB out here up 750. You're doing 1.1 million shares, and that needs about 2.2 million. That being said, I suspect that it's going to go after that 342.88, which was the high that was generated out here on the 30th of November. The small caps. We take a look at the small caps. What we have with the small caps are up $1.69, and they have a long way to go. The last high in the small caps are 120, and that is not the high. The high in the small caps, the IWM is 129. The small caps are trading where they were trading, and man, this is pretty insane. The small caps, folks, are trading where they were 2 years ago this month, December of 2013. That is an extraordinary sideways move. There's no two ways about that. That's pretty amazing, actually. As we come into this 3 o'clock, it's getting more juice. You got the Dow up 233, Nasdaq's up 74. The S&Ps are up 28. You're at 2065. Some of the Dow stocks, let's take a look at them out here. You have Honeywell. Honeywell had, right from the get-go today, it was up 350. Now it's up 560. Caterpillar's up 88. That was actually down. Citigroup is up $1.36. Exxon is down 30 cents. Exxon may be Exxon and DuPont. more than likely probably the only ones that are negative inside the Dow Industrials. You have Exxon down 29 cents. DuPont's down 51. Johnson & Johnson's up $1.16. Big Mac's up 125. 3M's up 224. Procter & Gamble's up 138. Walmart's up 74. United Technologies is up 2. GM is up 92. Let's go take a look at Chevron. That was getting a really good bid yesterday. CVX. Okay, so Chevron's up 89 cents right now, and that's going to go after that swing high. The swing high of November 3rd. That's what it looks like. That swing high is 98.64. Now, what is amazing, that being said, is that when you go over and take a look at the oil market, folks, the oil market, and we were just talking with Daryl, bottom line, oil market hit a low 2 days ago. That low that was generated out there is 34.53. It had 550,000 contracts. It bounced yesterday with 475. It's coming into this with 375. It's trading at 35.60 right now. That 34.53 wants to get tested. So we'll see how that shakes out on this test. The amazing part, of course, and what's also sticking out there like a sore thumb for the oil market is the 2009 low. That's on the continuous contract, and it looks like that's going to get hit. That's $32.40. 32.40 was the low that was generated in December of 08, and we'll see whether they can take that apart or, in fact, that is going to be it. The way that the setup is right now, which is pretty cool, is that if you break that B point and you break it with volume, well, guess what? You get an additional ABC structure on the way down. Inside the Dow right now, you get that up 250 or 243, and the last high on the Dow, excuse me. Sorry, folks. Excuse me. You got the actual high on the Dow is May. Okay, so it's back quite a way. The actual high is 18,350. The last high that it hasn't been able to get up and over thus far is 17,977. So that's 200 points away from where we are at this particular point. And that high that was generated, that was November 3rd. You know, it had tried to get up into that on November 20th, it failed. On December 1st, it failed. On December 2nd, it failed. On December 4th, it failed. It's going to try again. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow is up 250, Nasdaq's up 80, S&Ps are up 29. We go and we take a look at the XAU, the HUI. XAU up 167 right now, 46.37. That little baby is saying it wants to go after this 49.96. That was the high that was generated out here on December 4th. We'll get the volume at about 8 o'clock tonight. XAU, same setup in the XAU. XAU's up $3. We're at 112.21. That's saying it's going to go after the 121.51 area. And that is about as deviant as you can get, meaning inverse correlation that the short-term rates are going up, which in turn will send the longer-term rates up, should send the dollar up, but the dollar hasn't been able to hold price. So just inside the commercial break there, folks, dollar basically, well, let's go take a look at it, because the volatility is here. There's no doubt, and the dollar just sold right off again. You had the spike that got it up to 98.64. Now you're at 98.36 again. You know, anything up below 98.37.50 is saying it's having a tough time hanging on to higher price, and the deviance in that move is just amazing. Let's go over and take a look at the Rand in South Africa. So the Rand in South Africa, this has to do with the South African gold stocks. The Rand in South Africa out here right now is trading at 14.92. That had hit a high last Thursday at 16.05. If we take a look at Harmony Gold, which is one of the large gold equities over there, that's trading at 79 cents. That had hit a high out here of 99 cents. And if you're interested in that market, folks, somewhere around the 73 cents, you get down there. If you get down there with some light volume, bottom line, that might be a place that you may want to pick that up. And if you haven't test drove the gold report, this would be a great time to do it, folks. You can come over to our website at TFNN. And at TFNN, you go to newsletters, you can go to investment newsletters, you can test drive the gold report 30 days absolutely free. If you'd like to test drive my daily newsletter, Market Insights, you go to newsletters, go to trading newsletters, you can test drive that for 2 weeks absolutely free. We go take a look at GFI. So GFI does a lot of business in South Africa. They also have mines across the world. That GFI, actually, even with this low gold price, they came in with a $15 million profit on November 18th, which was just a mind blower for the market. That spiked from $2.04 up to $2.65. She's trading at $2.76, and she's got some juice behind the move. You know, so you know the amount of bread that some of these companies can make at lower prices is pretty wild. A lot of that is going to have to do with the low oil price, because this low oil price, folks, inside the mining business, is a huge deal because the energy after, energy on a long-term basis is always their largest expense. When you're building the mine out, it's cement and iron. That's big numbers. There's no two ways about that. That in itself, though, is a one-time cost building the mine versus going forward and continuing to service the mine. We go take a look at the silver market out here. SLW. We'll take a look at SLW. This is Silver Wheaton. This is one of the largest silver brokers in the world. That's acting correctly also. You know, come off the lows out here in October. We go from a price point of 1168 up to 1495. You back down with light volume to 1191. And what you have out here today, she rejected lower price and she wants higher price. As I was talking about yesterday, FNV was basically, well, and the signal was correct in this case. That was rejecting lower price yesterday. And coming into this rate move, I would, the metals, they could have won it either way, man. There's no two ways about it. It's intriguing to me that the rates they're going up. They have gone up. They're going up. And the thing that is absolutely amazing, though, is that guess what? The metals want to go up with them. So I guess what we have there is that, does that mean inflation has already caught on and we're going to be in an inflationary era? That is going to be a wild card out here, folks, because the way that the market is trading right now, there's like a disconnect as to what rates are going to be, and where the bond market actually is, and particularly where the metal market is, because that's fundamentally the way that would be set up is that dollar up, metals down, commodities down, and that's not what we have happening out here. In fact, inside the commodity market, the only thing that is positive, silver's up 2.9%, gold's up 1%, and natural gas is up 1%. Copper's up 0.8%. Everything else is getting basically toasted out here. It has crude oil's down 4%, and New York heating oil is down 2.8%. And where there is a disconnect, in my own head anyway, is that the mantra inside the Fed is that we're going to be slow, gradual. That was on a continual basis. Well, inside their statement today, they said they're going to be at 1.37% at the end of 2016. Well, that is not a quarter point a month, which they could do. Bottom line, though, it is a quarter point on a quarterly basis. Because if that's what you have, let me just see. I'm going to put this calendar up for a second. So we'll see how many. Where is it? Okay, so if I put this calendar up, let's see how many. So they have, I see what's going on, December 16th. So you got 2, 4, 6. Okay, so there's 8 meetings a year. So they're saying it, there's going to be 4, they're speculating there's going to be 4 rate rises within that 8 meeting structure. That's how that's shaken out. So that's not the end of the world. But the bottom line is that, when you do look at the bank-to-bank rate, that's exactly what that is. And that is going to make the banks more money. When you take a look at the rate structure in general, though, none of us were getting money at zero anyway. That's the other side of that. Apple's Big Blue. Let's go over to Big Blue when we take a look at Big Blue. So Big Blue up $1.55, 139.35. Can't get out of its way either. Netflix, NFLX. Let's take a look at Netflix. Netflix is trading up 384. We're at 122. She looks like she's going to go for highs again. Yeah, I mean, Netflix can go after that 133. Again, if we take a look at Google, Google is up $14, $7.58, and that's also looks like it's going to go after it. So there's definitely a few NDX stocks that do want to go after higher highs. The problem inside the NDX and the S&Ps are going to be Apple, folks. Zero juice. Apple hasn't even got back to the high of today yet. It's up 80 cents right now, trading at 111.29. This is Tom O'Brien. This is TFNN. You stay right there, folks. You're coming right back. Dow up 252, NASDAQ up 81, S&P's up 31. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 246. That's 1.4%. S&Ps are up 30, which is 1.6. 1.5, and the NASDAQ is up 1.6 at 79. Volume-wise out here, as we come into this close, I believe it's still going to be weak. Yeah, it's going to be weak. We're at 771 million on NYSE. We take a look at the composite. The composite's going to come in. Well, the composite's going to come in at 2 billion. 2 billion's not bad. NYSE, though, not even close. Some of the high-volume stocks in this market out here. We have GE up 84 cents. Freeport McMoran, that finally got a bid. Don't touch it. It's up 21 cents. Citigroup is up 144. You got Kinder Morgan up 10 cents. Facebook is up 224 at 106. Let's go take a look at Facebook and see what's happening with Facebook out here. So Facebook is at 106.79, and that's going to go after a high volume swing high also. 110.65. That's That was the high that was generated out here on November 5th, and it looks like she's going to go out after that number. Let's see. You get Ford Motor up 48 cents. Microsoft is up $1. Let's go over to Citigroup. The banks should get a big bounce on this, no doubt. This is why, folks. So Citigroup is up $1.45, 23 million shares. Citigroup doesn't necessarily have to go over after its highs. Well, the highs in Citigroup the last 6 months are $60 and still at 59. What you are going to see, let's go over to J.P. Morgan Chase for a second. J.P. Morgan is pushing on volume, 18.4 million. Now, what happens with the banks and the broker-dealer structure is this, and this is where the banking structure can make a huge amount of money without doing anything. The amount of money that we have in banks right now, the excess money, the short-term rate that we've been talking about today is from 0 to 0.25. Well, the Federal Reserve, which is just insane anyway, they were paying the banks on the money that they had. You know, and that's one of the main reasons that the banks themselves wouldn't lend to anyone else, because it was a no-brainer, okay? Just keep the money at the Fed when, in fact, the money's not at the Fed. All that's really happened is there's a digital bookkeeping event that happens. Well, now what has happened is that all that money that's in the banks, they are going to get paid from 0.25 to 0.50, okay? So it's a big number, and it's going to be a big number going forward, because that's the spreads that, and as one of the couple of the Tigers was saying, well, Wells Fargo's not going to go up in deposit rates, and J.P. Morgan's not going up in deposit rates. None of them are going to go up in deposit rates, folks, because they don't have to. It's like the gas stations at the beginning of prices that were coming down. At the very beginning of prices coming down, they bottom line didn't want to go down on prices. Now, competitively, after a while, they had to go down on prices, and they did go down on prices pretty dramatically, too, by the way. I wouldn't expect that you're going to see things go up that dramatically. The wild card out here today is that the bond market hasn't got killed. It's not even close either. I mean, you're talking about, we're still at 2.29 on the 10-year. And it was a question in the den, does that affect mortgages? Well, at 2.2, the bottom line, you still get a mortgage at what, 3.7, 3.85. That's how that shakes. So that means that long-term mortgage rate hasn't moved. You know, we'll see if that changes, but thus far, it's not moving. Dow Industrials up 226, Nasdaq up 75, S&P's up 27. You stay right there, folks. We're going to be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. And I'm so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We're here 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. The start to a better life or a better world or a better future is to simply believe that it is possible. Market-wise, let's take a look at it out here. We have the Dow Industrials up 224, Nasdaq up 75, S&P's up 26, gold contract up $11.50, trading at $1,073 an ounce. Now, what you had Federal Reserve, 2 o'clock, go up in rates, first time in 9 years. We went from 0 to 1/4 point. Federal bank-to-bank rate, we're going to go from 1/4 to 1/2. Bottom line, they say inside the minutes or their statement that they feel at the end of 2016, rates, short-term rates will be 1.37. ASAP, the banking structures put up the prime rate. Wells Fargo's out there at 350 right now. Thanks, Terry, for that info. Great info. Gold up $11.30, trading at 1,072. And that absolutely was a counterintuitive move, folks. Specifically, what I mean by that is this. So, rating structure goes up. Most of the time, rating structure goes up. Dollar should go up. Commodities go down. Now, commodities have got killed. There's no doubt about that. Bottom line is that there was only 3 commodities that were higher today: gold, silver, and natural gas. Bottom line, gold is trading at 1072. It got juice into the move top side, wants to go higher. It's going to go after the December 4th swing high at 1088. You get volume there, you're going to have a lot higher price of gold. Silver was up 39 cents. It's at $14.16. Now, silver was a false break downtown. Specifically, what that means is that it's been in a consolidation 4 months. It broke downtown 2 days ago. Down real good, actually. It was down at the $13.60, and it just blasted higher. This is before the Fed move, and it stayed higher. Bottom line, silver also wants higher price. Oil, whole different ball game with oil, folks, man. We just must have so much oil, and bottom line, oil very well could be an ABC structure on the way down. Now, oil was down at $1.71 today. This is a closing low for oil. $35.63. Will 32.40 is the low of December of 2008. It's going to, I suspect, go after that number. We're going to have a much better indication if that number is even going to hold. Why? Because it looks like the oil market is set up an ABC structure. This is the physical oil market on the way down. Now, if you break that B point, which I suspect we're going to go after tomorrow with volume, guess what? That means oil will go a lot lower. The bond market. Now, this one's pretty wild. So we go up in short-term rates. The 10-year bond is down 14 ticks, 125.21. The 30-year down 14, 154.09. Both of those have pulled back with lighter volume, and they are not at the lowest swing point, number one. There really wasn't a lot of movement inside the bond market, which is really unusual in the context that rates are going up. King dollar. King dollar up 137 ticks, 98.42. King dollar having a hard time holding higher price. King dollar looks like, bottom line, still wants to go after its lowest swing point of 95. And the thing that's amazing, of course, is that the first expansion down in King dollar had to do with Draghi over in Europe, December 4th, saying that they're going to extend their monetary policy, meaning still pump money into the system. He just didn't expand it. And that's where King dollar got killed. That's where the euro caught a bid. The euro right now is at 109, and the yen is trading up 55 at 122.22. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We bring up the SPY. What you have with the SPY is this. SPY was up almost, well, it's up $3. It's up $2.99. We came in with volume of, there she is, came in with volume of 189 million shares, and that's saying that, bottom line, that thing can go for the last swing high up here, which would be 211. Right now, you're 208.03. NDX 100. Now, the NDX, bottom line, has been having a tough time catching a bid all day. It had, you know, it went up. It went up by $1.67, 113.98. That did 44 million. It's going into 48 million. That also can get up into that 114.28. That'd be the lows of the highs. We'll see whether it can actually get into those highs. It's going to be really tough with the NDX 100 because of the amount of downward pressure on Apple. Apple today, folks, was up 84 cents. It had a high of $111.99, a low of $108.80. It just couldn't handle price, and that's with our markets going up 3 days in a row. Apple hasn't been able to basically follow those markets higher. Gold contract. What do we have with the gold contract? This is what you have. Gold contract right now caught a bid, and this bid was caught before the Fed came out with the numbers, stayed up, which is impressive in the aspect that the rates are going to continue to go higher. We're at 1,071.80. 1,088.30 is the high of the December 4th level. It's going to go after that high. You break that high with volume, then you're going to see real juice. Then you can make the point that you're going to go to 11.92 in gold. 11.92? Yeah, 11.92. And we're at 10.71. Silver market, as I said a little bit earlier, that absolutely was the best performing commodity out here today. That was up 37 cents, 51,000 contracts. It's right back inside 14. It's going to go after the December 4th swing high of 1462. You get that with volume, that's going to end up getting a $16.40 print. Bonds. Now, this is where this is just a bond market. We take a look at the 10-year. 10-year went down to a price point of 125.12. Rejected that level. Closed at 125.22. Had volume of 968,000, which is really weak, going into 1.6 million. So the 10-year is saying it wants that's a rejection of lower price, has lighter volume. The 10-year is saying, hey, we're going to go right back topside and go into 127.10. And if that's what we do, that is going to be the biggest mind blower around. Why? Because we know that we're not speculating that they're going up anymore. The short-term rates are up. They're going up, and the Fed's saying they're going to go up another point in the next year. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials closed up 224. NASDAQ up 75. S&P's up 26. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had so Federal Express closed today up $4.14 at 148.83. They just come out with numbers that's trading at 154. Numbers go like this on Federal Express. The estimate was $2.50. They made $2.58. Their operating margin for the quarter is 9.4%. They revenue also beat. So the estimate on the, let's see where that revenue number is. Here's the revenue number. Okay, so the second quarter revenue they expect to be, the estimate was 12.4 billion. They took in 12.5 billion. Now that being said, you take a look at FedEx. This is pretty wild. Just looking at this equity, and we know that online shopping has gone up dramatically. Deliveries have gone up dramatically, but evidently something's going on with FedEx, because the high in FedEx, folks, is 183. That was established in November of 2014. Let me bring this back so you can see how this shakes out. This is where there's a lot of disconnects in the marketplace. So your first high was established December of 2014, 183. It went down to 163. That took all of a year to get down to 163. It took about 8 months to get back to 185. It tested to 185. On a monthly basis, you had 8 million shares, testing 10 million. Then it gave it up in spades. It went from 185 down to 140, straight down. You did a counter trend bounce back up to 164, and right now, you get a bounce up to 154. It's going to need a huge amount of juice to basically just get to the last swing point that it had. If we take a look at UPS, see what the correlation inside FedEx is with UPS. UPS is trading at 100.51. That's what it closed at. It's trading right now at 103, which would make sense because FedEx come out with some decent numbers. We take a look at UPS. So UPS is in better shape. This is pretty wild. I wonder what the difference is. UPS, the high in UPS is 114. This is hanging right at its highs. Bring this back. You'll be able to see how this shakes out. So whatever, there is a difference there somehow, and we'll see what that difference is. Now, folks, let's go over to our man, Mr. John Logan, who kicks us off every trading day right here, 8 o'clock in the morning. John also has a great piece of software. It's the TAS Market Scanner. You can check this out. You can test drive it right on the front of our webpage at TFNN. And don't forget, folks, 8 o'clock in the morning to 5 in the afternoon, we broadcast live Monday, Wednesday, Friday. Tuesday, Thursday, 8 o'clock in the morning to 6 in the afternoon. That's all live content. We take that content, we replay it overnight, so you can get us 24 hours a day. You can get us right on your cell phone, tfnn.mobi. You want to get Tiger TV, just go to tfnn.com. On the right-hand side, you can hit Tiger TV. You'll see the great video that comes up right on your cell phone. John Logan, what's going on?
I'm so happy to be back with you.
Me too, man.
This is just a glorious day. The Fed actually came out with exactly what everybody was expecting. They're doing the quarter point.
Yep.
They're doing the dovish talk, and markets like it when there's no surprises.
There's no doubt. Yeah. That's
evidently that's happening right now. So, Tom, this morning we were talking about some levels on the S&Ps.
Yes.
We're kind of trying to see where the balance point is, with the breadth that we look at in the scanner. And 1057 held for a little bit there. We got a decent pullback off of it actually for a while.
Yep.
And then this follow through that happened above this latest profile. This is kind of scary here for looking at this from the short side right now. I'll admit it.
Okay.
And what I'm also looking at, it's a little bit of a tug of war as you've been talking about with these notes and the bonds. These things aren't exactly getting creamed, if you know what I mean.
They're
not.
It's look at it. At one point intraday today, folks, only an hour and a half ago, the bonds were flat. That was that was amazing, actually.
Yeah. So what is that foretelling? I mean, the bond market,
I'm
the
not
note
sure.
market. Yeah, exactly. I mean, so you have to kind of read into that a little bit. I mean, markets like lower rates, period. And with the dovish talk, it's kind of bleeding into a lot of things here.
Yes.
And you knew that was coming. But markets have been drunk on a higher dollar and lower rates for a long time, and it's like they're not going to upset the party. They're not going to say anything that's going to, in my opinion, cause anybody to think anything differently right now. So, a lot of guys out there who are portfolio managers just love that rhetoric. I mean, there's no other way to put it.
Yeah, and I guess when you look at if we talk portfolio managers of the market, bottom line is that the market's still flat for the year, which is pretty wild, man.
Yeah, I mean, it's had a lot of chances to bust out. I'll admit that. I mean, there's just been ample opportunity for that to happen. So, there's so much to think about right now. I was talking this morning on the show at 8 o'clock about the U.S. dollar. Where's this thing going to end up ultimately? I think with our debt problems, I think it's going to end up way south. But right now, it's relative to the globe. So, what's the best place, the safest place to put money right now? And the market's kind of digesting that too. So, I mean, there's so many peripheral little things going on. And I think the volatility is just going to be here for a while in the S&P. So anybody who's trading that based on all these things considered that we just spoke of, I mean, you got to keep your eyes out, on the borders of little things that can happen, especially with, you're always looking at currencies, treasuries, and then broad marketplaces. And
if listen, you're trading the S&Ps and the NQs, it's awesome. I mean, the spreads are huge, folks. That's the other side of it. When you get 20 points in the S&Ps and 50 points in the NQs, well, guess what? Going back and forth, that's a good trading environment. There's no doubt.
Without question. Can I throw a couple of darts on the board here?
Yeah, totally.
All right. So what happened today? You want to try to find. In days like today and what's been happening in the near past here, I mean, we've rallied what are we at right now? We're up almost 80, 90 points in the last 3 days.
Yes.
That's an incredible, I mean, okay, you guys know that's an incredible move. I don't have to say that. But, in times like this, you want to try to see, what's kind of showing itself right now. So you want to find stocks to try, if you're a trader, you want to try to use in my opinion, sometimes a relative strength trading system or relative weakness trading system. So I'm trying to find instruments that are just getting into areas that are relatively weak, that are maybe just poking their head up so you can whack it again.
Okay.
You know what I mean?
Yes.
Because the market is, rising tides lifts all boats. The market has kind of dragged us up some pieces of crap, for lack of a better way of putting it. And you're getting into areas where you may be able to short those instruments again. And it's also clarifying what were the strong instruments in an environment like this too. But
you stay right there, all right?
Okay.
John and I are coming right back. And don't forget, folks, every trading day, 8 o'clock in the morning, John kicks us off at TFNN. Now, no matter where you are listening in your car right now, remember, right on your cell phone, TFNN.mobi, you get the audio, TFNN.com, Tiger TV, get the video. John and I are coming right back, folks.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. John Logan. And as you come over to TFNN, folks, you're going to see right in the front page. We at December 16th today, we have a Tiger Dollar sale going on. That sale, folks, is over on the 21st. Now, the way Tiger Dollars work is this, is that they're good for all products at TFNN, totally transferable, no expiration date. We do this a couple times a year. In this particular case, because it's the holidays, we are going to be donating either 5% or 10% of the cash value that you buy in your name to the Salvation Army. The Salvation Army sends out to you the tax certificate so that you can write it off on your taxes. And just to give you an idea how it would work, you buy $500 worth of Tiger Dollars, you get $625 to spend. We donate in your name $25 to the Salvation Army. You buy anything over $1,000, let's say you buy $1,200, you get $1,500, so you get $300 extra to spend. We donate $120 to the Salvation Army. You write that baby off. So in that case, you know, you're really you're at 1120. No, you're 1180. No, you're 1080, and you're getting $1,500. You know, so it's a nice deal. We're talking with our manager John Logan, and we are talking about the TAS market profile and what we've been. As looking at intraday, daily, and the weak versus the strength. So,
we're going to get a little bit into the mechanics of this in a little bit, but I wanted to just kind of throw some wins on the board, hopefully for some folks based out of this scanner. When in a time like this, when the market's just elevated 80, 90 S&P points, how many Dow points have we rallied in 3 days?
Well,
like,
if it was 90, that'd be like 700 probably, right? Let me see.
My goodness.
I know. It's pretty. It's good. It's so you got, let's see, 138. 600. 600 points from low to high. which is intriguing because the S&Ps did go 80. So that's the S&Ps are showing that that's a little bit more, but 600 points.
Jesus. Okay. Well, anyway, so that should have lifted some stocks up just in itself.
Right.
And what we're trying to do with the scanners, we've got a custom sort in there. I call it downtrend resistance. And what it's doing is it's got a little formula there. You can click on it, kind of look through the conditions. I hope everybody's seeing that right now who's watching the screen. But one of the stocks on here, it's got a condition where it's Caterpillar. Obviously, this is no mystery to anybody. It's been down. But what's happened with the market is kind of dragged this thing up, and it's put it on the radar screen. I can go in here. And by the way, we actually have a real chart going in this week finally. In addition to that levels chart. But Caterpillar, that's the long-term view. Obviously, no mystery to anybody. But what's happened is we've lifted ourselves from 64 and some change up into 67.
Yes.
68, whatever that is, rounded off up there. And this is a really cool scene because Caterpillar could barely get out of its own way. It's rally. Things on their lows go lower, things on their highs go higher. A lot of people, want to try to double down, buy things on sale. This thing's still in a very defined downtrend. That's what the scanner first looked for. And then it's looking for things that have just kind of popped their head up into areas where you can whack it again, like the mole kind of thing at the surface. So Caterpillar's right up into this inflection point here at 67.85. And for all intents and purposes, I mean, we've had about a 7 or 8% up moving, 7% moving Caterpillar from the bottom the other day, but defined downtrend coming up into resistance, nice little pick, market help coming down a little bit. This thing's probably going to settle back just a tad. So at bare minimum. So, this is again, a stock that's, got problems. Dollar seems to continue to get strong. Fundamentally, may have some headwinds ahead, but now you've got some technical reasons to hit it again.
And when you look at it's pretty amazing. This Caterpillar, man, this has been on a downtrend for quite a while, right? 116. Caterpillar's traded at the same price was traded in 2006. My God, unreal.
Yeah, and you know what? It's like you got to turn the wrench the same way every day you go to work. It's the thing's in a downtrend. You don't let somebody else spend their money to try to figure out where the exact bottom is. We'll see some technical changes when that happens, but then we won't have to kind of try to you know what I'm saying, pick the battles on the extreme bottom and put on a lot of risk to try to figure that out. Let somebody else figure that out, and we'll see the turn start to happen here, but it hasn't happened yet.
Now the breadth gauges. Let's talk about the breadth gauges a bit. Now did the daily turn into a positive? It probably did by the end of the day. Yeah, it did. I see. Okay.
Yeah, okay. It did. It's there's some other things to keep your eye on here. And I'll just point them out to you. I don't talk about them a lot because I don't like to get too esoteric with this thing, but if I come in here, I'm just going to blow this up, and we're talking about daily crossovers right now. I can block out one side of, I can block out the stocks that are trading above the balanced areas. I can block out the stocks that are trading below the balanced areas. And I can block out the middle ground there if I want to, and just look at purely the amount of stocks that are trading above profiles relative to the ones trading below profiles. But a lot of times you can get some leading indicators with this, and I'm just going to look at the middle ground here.
Okay.
And I'm going to, just kind of let folks know that, we got a little bit of an early indication yesterday when the conversion happened of the amount of stocks trading below profiles literally started getting, the ones that were converting up into at least the balanced area started happening yesterday from below.
That's right. Now, and folks, if you're listening to the program this morning, John was going over this morning. Go ahead. Yeah. Yeah,
and we're looking at an intermediate time frame type, sea change type move here in the tide of the broad marketplace, yes. The S&P 500. But as you remember, like back on December 8th, we started getting indications early, and we got that crossover of the amount of stocks trading below profiles that started happening way more than the amount of stocks trading in the balanced areas. So if I map that, the green in, this kind of confirmed that we were really in trouble, actually. Now, at the very bottom, we talked a little bit about this morning and the day before. A lot of times you can come in and look at, and we can't show this on the charts on the back testing historical views I just showed, but when we start getting a lot of this like right now, we're about 10% showing new profiles attempting to appear below, which means new demand areas down below. And that started happening a lot today. This yellow area in this particular odometer started getting populated.
Okay.
And that was kind of concerning to really start, whacking the thing from the shorts. I mean, the fundamental on days like today, this is an extraordinary day because the Fed's raising rates for the first time almost in 10 years. I mean, this is a kind of a throw a lot of things out the window day. But as you look at this,
but the scanner was picking them up, man. That's the bottom line.
Without question. I mean, I talked about 2057 this morning. I'm going to go back to the S&Ps. But what we normally try to get people to do is, what's the I like to trade a little bit more longer term situations, and I obviously will take advantage of short, even intraday possibilities all the time. But we try to cover a lot of ground on the show in the morning for a lot of different styles of trading. And the broad tone of the marketplace has really had converted over to being on the short side a little bit here lately. And we looked at 2057 as a level that we could possibly hit, but we had to pay attention to the broad marketplace breadth when we started playing around with that area. And it started converting over a little bit early, and it was a little bit concerning, and the market obviously got what they wanted to hear at the same time.
Cool. One more segment. Cool?
Mm-hmm. Yeah.
Awesome, man. You stay right there. John and I are coming right back, folks. Dow finished up 224, NASDAQ up 75, S&P's up 25. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with man, Mr. John Logan, who kicks us off every trading day, 8 o'clock in the morning. Great program, folks. He has a great piece of software. You can come over and test drive it right now. As you come over to our website, right at TFNN, you're going to see it right on the front page, the TAS Profile Scanner Plus. You can test drive this 2 weeks absolutely free. Bottom line, listen to the program, folks. It's an amazing program. Before the markets open, John will walk you through all the markets. You'll be able to see. If you're in your car, just put TFNN.mobi on, M-O-B-I. So it's TFNN.mobi, okay? You hit Mobi, bottom line, what do you end up getting? You're going to end up getting the audio. You happen to be at home, in the office, put TFNN.com on, and then just hit Tiger TV. You're going to be able to see the profiles. John also has some great videos there so that you can understand exactly what you're looking at. You know, and I know our man Dave from Clearwater is probably out there. A couple days ago when you're having that conversation with Dave, that was a great conversation, by the way. And, and Dave, if you're out there, the bottom line is just you want to do the Gartleys, you're going to do the fibs, and then you're going to just put this together with it, and you're off to the races beyond belief.
Yeah, I mean,
you don't need to upgrade this anymore, man. This thing is like to the moon already. Seriously, so picture this, folks. You got to listen to this program in the morning because you got to picture this. This was absolutely hilarious. These two guys are talking for like 40 minutes. It was a great conversation, but
I loved it.
Our man, Mr. John Logan, right? He must be so meticulous, right? He thinks he's got to upgrade this every day. It's probably the best piece of software I've ever seen. And so I know how meticulous Dave is, right? So this is Dave from Clearwater. I've heard him call it. So I know that he's so deep into it, man. He's right in the forest, right? And so I'm sitting there trading, John, on my kitchen table, right? And I'm laughing. I'm saying to Bridget, listen to these guys, man. Anyway, it was a great conversation. It was funny, man.
Well, there's a lot here. There is a lot. There's a lot of questions that I probably haven't answered, and it was great for him to call in.
Oh, it was an awesome conversation, man. Yeah.
Yeah, and I'm doing a really good kind of how-to video series on this. Not what happens when you press the green button or whatever, but how do you extract money out of the market with this product? And I've been waiting until we got the last couple of things in here, and I know you've been hearing that for a year, but we actually do have a chart going in that people can see a little historical price action, have our profiles painted on it, and I looked at them from the programmers today. They'll be out literally tomorrow.
Yeah.
I think
poor guys, you're not letting your guys sleep, man.
Well, they got to go on vacation at the end of the week, so I said, look, you're not going on vacation until you get this done. Anyway, but one of the things that it really does, I was going to get into this before let's do that before the break, is the breadth and what kind of the broad tie to the marketplace. Basil coined that so perfectly when he kind of was listening to the show one day, and I was like, yeah, that is a great way to coin this.
Yes.
Get the broad tie to the marketplace. Find some of the instruments that are really showing themselves, in my opinion, to be relatively weak or relatively strong. And then you got a third step, which is, where do you enter the trades and where do you say uncle and where do you probably take some of those hopefully profitable trades off. So that's kind of the 1, 2, 3 step kind of process. But, hopefully, a lot of people can extract some value out of this who are trading on all kinds of time frames. A lot of intraday futures traders literally use the 60-minute crossover exclusively to whether to lean on the short side or the long side of the S&P futures. That means do you kind of pass on all the longs and just go short when we hit some of these areas that are ripe to go short in, which the scanner tells you where those are, or do you block out the short side and go long only? And that's a very black and white situation that even somebody as dull as I am can understand. I want a very simple system, and I want to be able to say, you know what, I'm only supposed to be going long right now. I'm only supposed to be going short right now, and that's that's really cool in my opinion.
No, it is, and the system is, to me, it's that clear. I mean, it really is. The cool thing here, folks, you have to come over and look at this video, whether you want to test drive it or not. Look at the videos, folks, and get to understand what profiles are. Because what happens is that in real time, and the software is telling you, are they above profiles or below profiles? And profiles in general, folks, that's where the supply and demand curve are meeting.
Right. And so we've got a really good webinar. I just want to make a footnote to what you said about the videos.
Yeah.
We did a really, I thought, pretty cool webinar with you.
Yes.
A couple of weeks ago, I think. I think that's archived on your site somewhere. That's the one where people just have to go to immediately, and then I think they'll get it. I mean, it's pretty insightful, and we had a good time that night. It lasted about an hour and 40 minutes. I think you guys have cut it down a little bit, but it was great. A lot of people asked some great questions. I think those are within that video. So one thing I want to show you really real quick here.
Yes.
We always try to, okay, what's the broad market doing? Then let's look into the sectors. So we've got the 9 major ETFs I'm showing right now.
Oh my God.
Yeah, and as you can see, the
what I'm looking at here, folks, if you're in the car, and the only
on that time frame,
ETF, what time? On the
4 hour.
On the 4 hour, that was, and the red was the energy XLE. Every other thing was all in the green. Interesting, yeah. All
yes.
of them too.
And then if you're thinking about, well, maybe I want to try and find some deals in the XLE. Well, you can drill down into it, and you can see pretty clearly by a red light, green light system really what is showing itself is, hey, maybe this one's not getting completely crushed.
Yep.
And also, what's really cool is you can go into the back into the dashboard and then go into what actually broke down today.
Yes.
So I can click that, and hey, there's a handful that actually, by definition, broke down today out of the whole S&P, and this is what, like 7 stocks.
Look at that, man.
But guess what? The Hess's, the Marathon Oils, the Pioneer Natural Resources Company. But you got 3M actually kind of. I want to drill down into that really quick.
Yeah, me too. Seriously.
Well, this week, I mean,
look at that. Oh yeah, that dog. That dog has fleas. Right. Okay.
Yeah, cool. I mean, the market dragged it up just a tad today, but this is 152.68. You got to really step in the box and take a swing on this on the short side if we get back up there. Right now, not a lot to hang on to. I think you could kind of step into a short here, but the good news is it lets you know where you can play some defense. I mean, we always talk about risk reward, and play defense first. Stops above 152.68 on 3M, and this thing with any type of market help could be at 136 in a heartbeat.
Yeah, what was intriguing is that when you were talking with Juan from Colombia a couple weeks ago,
I'm going to see him on the 14th. You're welcome to come, by the way. I'm renting a cool place for a bunch of folks. It's going to be a nice time.
Of January 14th.
January 14th, I'm going to 15th, maybe 15th. I'll be there.
Okay. Yeah. They just coming across the tape now. That's in Colombia, of course, right?
Yep.
Medellin, right?
Medellin.
And you know what's amazing is that I know. Here, we'll just stay right there, all right? But because what just happened coming across the tape, Argentina just released the controls on their peso. They're going to let it float, and that's getting crushed right now as we're speaking against the U.S. dollar. You stay right there, folks. John and I are going to be coming right back. Dow Industrials finished up 224, NASDAQ up 75, S&P's up 23. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. We're talking with our man, Mr. John Logan. And don't forget, folks, tomorrow morning, 8 o'clock tomorrow morning, right on your cell phone, tfnn.mobi. You'll really enjoy waking up with John. He'll walk you through these markets. We love having you on, by the way. It's just awesome, man.
Thanks, man.
You know what's great, man, is that 8 o'clock is really a great time because it's not. It gives you plenty of time before the market opens. I know you've been up a lot earlier than that, looking around the world, but it's really a great time, man.
Yeah, I mean, I feel scatterbrained when I start the show because there's, I've been up for a while. There's so many things going on. There's so many things I want to talk about, and the coffee is a great tool.
There's no doubt. There's no doubt.
I know you love your Starbucks. Every time I go down there,
I do. I'm addicted to it, man. There's no doubt.
Another thing not cooperating here, man. I don't. Yeah. This thing's got just ultra problems. STX. This was on Seagate. This was on breakdown situation. It's the only 2 stocks by our algorithm on the breakdown custom key, 3M and Seagate, that are not energy stocks.
How about that? That's wild. And we're talking now. Would that be in the whole S&P 500, John? Is that
correct?
Okay, cool.
And you know what? Look, check this out. I can go in here. See how I got S&P 500 checked? I can actually search the entire globe. I can go to Mexico, Hong Kong, what have you.
Yes.
There's not a lot of stocks breaking down right now.
Right. So that's really cool, though, man. That's huge. There's no doubt.
Yeah. So by definition, actually inclusive of quite a few other exchanges, this is the only one by definition. Are these the only 2 stocks outside of the energy stocks?
It's going to be interesting to see what happens with oil tomorrow morning. Oil couldn't hold that bid out here today, so it's
yeah. My goodness, let's show people how ugly this is. Actually, we've been talking about this for a while. We talked about it this morning. I was like, and I'm not a big fan of buying this 36 support. I'd rather sell the breakdown again. I mean, right. I know people are like, "Are you out of your mind?" But as we look at the futures section, I'm going to go in here. I'm showing it right now. If I go to WTI crude, and by the way, we put our futures completely on a separate server now.
Nice.
And this thing is just like, even during the announcement today, was wicked on time. It
Flying. Was That's so really cool, man.
Using some Boston lingo there, by the way.
Totally. I picked it up, man. No doubt.
So as we look at this, I'm showing this on our multi-levels thing. We've got this kind of red across the board here on, literally every time frame. But as I go into crude oil, I'm gonna go down to the what is this? The January contract here. it's just sad. I mean, there's really, it's just like Caterpillar. It's like you got to keep turning the wrench the same way until we're really told differently by some kind of technical change or damage.
Yes.
And it's just not happening, and I don't really understand all the fundamentals in crude oil. I specifically look at this with the technicals. I mean, I was hoping we would get a rally up to 39 so we could just really seriously take a look at whacking it again. But now we got to play. Now we got to play the breakdown game again.
Yeah.
So
it's pretty amazing when you actually think about it that from highs to lows, how far we went. And then heating oil, forget heating oil. Heating oil is worse than the actual barrel of oil, folks, okay? You guys in the Northeast and in the Midwest, you're going to have a field day this winter. Well, you probably don't even need it because it's still warm out, right?
Yeah, it's incredible. I mean, like, when you think about how much oil is consumed globally, I mean, somebody told me one time, just the oil that's converted to gasoline.
Yes.
You take a square mile of the earth and go up 3 miles into the air.
Okay.
That column is how much gasoline is consumed on this planet.
Every day?
I forgot. I'm sorry. I forgot if it was every day, every year.
It must be every day.
I think it's every day.
Yeah, probably.
I think it's every day. But that, you're like, how can this thing ever go down?
Totally. Well, until tomorrow morning, man. You have a great night, a safe night, and of course we look forward to showing at 8 o'clock.
We'll pick it up then.
Okay, man. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. 8 o'clock tomorrow morning. Tune in right here, TFNN.mobi.